take a different approach to Lakshmi Puja this season.
Join BloombergQuint.
For a rich life and a life full of riches.
Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali. Happy Diwali.
Happy Diwali.
Hello and welcome to BloombergQuint, the top headlines. The Nifty falls below 10,200 as markets consolidate on the last day of Samvat 2073. Axis Bank is the top Nifty loser today as investors react to its growing NPA pain. And MAS Financial is up as much as 46% in terms of premium on the bourses. And Chinese President Xi Jinping warns of severe challenges while laying out the road or map to turn China into a leading global power by 2050. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is independent investment advisor Vivek Mawani, who expects a correction in the next few weeks. Vinit Bolinjkar of Ventura Security believes that the Indian markets is at an inflection point for wealth creation. However, he says one needs to remain cautious with a bet on value stocks. Avinash Gorakshekar of Joindra Capital believes that the markets are likely to remain in a consolidation zone at this point of time. Thank you to all our guests. First, the stocks that we'll discuss today will be counters like Axis Bank, we'll discuss Mindtree, we'll discuss Z Entertainment, JP Power and MRF. So these are the counters that we'll talk about. Let's talk about the first stock. And before we start, happy Diwali to all our guests and thank you for coming here. Axis Bank, down almost 7%. Very, very poor set of numbers. Is the worst over? Is this a private bank? Is this a PSU bank? We'll ask our guest their view on that. Let me start with you, Vinit. What's your view on Axis Bank? Do you think the numbers were bad? Now, what's the step ahead now? What should one do?
So, with a single-digit ROE, and ROA, and no bias for the stock, I think this stock is heading towards 450 levels, and it's available. Its adjusted book value is about 234 rupees, and if you give it 1.5 times and some value for its subs, I think over a period of time the stock could anywhere settle down between 400 and 425.
Okay, but if you see that there was a pickup in loan growth, that was the numbers that they showed. The CASA ratio was good. I think the only problem that came out was basically the asset quality. So would those concerns still remain? Would asset quality concerns be much more important than the growth that the bank showed?
Yeah, so the asset quality is very important, and because of this it is suppressing your return, it is suppressing NII, and that is impacting your NIMs and overall profitability. So it's a vicious cycle. So until you don't address this completely, it'll be a while before things can start looking up for the bank.
Okay. Avinash is down almost 8%. Is Axis Bank a PSU now?
No, I think Darshan, yesterday after listening to the con call, I think one got a feeling that whatever has come as a shock to investors, because only 25% of the asset write downs have come actually from the watch list, and the remaining have come from the from assets outside the watch list. And I think the management was very clear that at least for the next couple of quarters the strain on asset quality would continue. So I think that is going to be a pain point for Axis Bank going forward. I mean, Vineet was talking about valuations. I would say that now people would like to compare it with ICICI Bank, which is now even trading at valuations below Axis Bank. So clearly, I don't think any re-rating trigger exists, at least in the next couple of quarters. And I think the stock probably would derate even from these levels. So I would believe whoever has it should still sell it, because probably price could possibly come down to around 430, 450 odd levels, and at that time maybe some value could come in. But till that time, asset quality will be a pain point, and I think it's better to stay away.
Switch to, if someone wants to switch, which private bank would you recommend?
I would bet on something like Kotak and IndusInd Bank. These are banks which on valuation kind of basis may appear a little expensive, but in terms of asset quality, in terms of the loan book, I would say that stability and asset quality are two premium kind of qualities of IndusInd Bank and Kotak. So I think both these banks, if they do correct, I think that would be a good opportunity to buy both of them.
Okay, so it's a 2 thumbs down. Vivek, what's your view? Is it a thumbs up or thumbs down for Axis Bank?
Absolutely thumbs down. I mean, just to add to what Avinash mentioned, I mean, if the management guides once more in yesterday's conference call, it's going to take a couple of quarters. Well, if I remember correctly, last 10 to 12 quarters, they have been saying it's a couple of more quarters of pain. And 10, 12 quarters, a bank can disappoint on its own estimates on the watch list, on their write-downs, on the bad loans, and so on and so forth. So every quarter, with the kind of the disclosures which come out, or with the kind of new bad loans which get taken up, one gets us one in fact raises more. I mean, the results raise more questions every quarter than provide any convincing answers that you can get from the management. That's number one. I mean, I could be very harsh and say that probably the management is still not very clear, or doesn't have a clue as to what really is the quantum of bad loans still out there, still inside. The huge, or rather very significant when one talks of percentages, the mismatch between what RBI would classify as bad loans and what Axis internally does it. My sense is over a period of time, their entire watch list plus the difference between RBI, all of that will eventually be will have to be written off. And when one adjusts for all that, it doesn't speak very good about either the management or the numbers. The stock has rightly got derated. I mean, when the entire banking and financial services sector in the last 2 years has got re-rated, trading at almost close to all-time highs. Axis used to trade at 650 2.5 years ago, March 2015, when it made its all-time high, and the book value at that time reported by the bank was about 169, 170 rupees. I mean, this year the book value is likely to be about 250. I mean, depending on what estimates you take, what assumptions you take on the write-downs, but let's take 230, 250 or 260. That number then is now more of a rounding off, and the stock is 25% lower. So you have a 70% higher book value and a stock 25% lower in a span of 2.5 years. I think the stock will continue to grind down at best if one is really optimistic. There's a trade, I mean, it's a trading opportunity between 450 on the downside and maybe 500, 525 on the upside. So traders can maybe play that 10-15% range, buy closer to 450, sell higher than 500. That's about it.
Okay, so it's a consensus thumbs down that's coming in on Axis Bank. The bank continues to disappoint, and all three guests believe that despite this 8% fall, there could be more downside on Axis Bank. Let's take a look at a sector which overall has not done well, but a specific, the mid-cap and the small-cap IT stocks have come out with strong set of numbers, be it Saskin, be it Nucleus. So the trend continues to be on the positive side for the smaller companies. Now, Mindtree is up almost 15% from the recent lows. Is it a good time to start accumulating Mindtree? Is it a good bet? Will mid-cap IT outperform the small cap? We'll ask our guest. Avinash, I'll start with you. What's your view on Mindtree?
I think Darshan, I'm mildly positive on Mindtree for the fact that, as you rightly pointed out, the smaller and medium IT companies have come out with a better set of numbers compared to the frontline numbers. Yesterday, Wipro reported numbers which were good, but the overall guidance continued to be little, negative and a little conservative. Talking about Mindtree, I think the key triggers for them would be the digitization business, and hopefully they have got 2 large deals in the insurance and transportation vertical, and I would believe that over the next 3-4 quarters, if this this business momentum in the digitization space gets more traction, you could obviously see a further re-rating. In fact, our sense is that over the next 12-18 months, this could be a good pick at the current level. We are looking at earnings of roughly about 35-36 for FY19. So FY18 may not be all that great, but yes, FY19 could be a lot better. Hopefully, the rupee also stabilizes, and I would believe that this is definitely an opportunity where at least a 18-20% upside cannot be ruled out.
Vineet, your view, do you agree with Avinash? Does it make sense to invest in Mindtree or probably the mid-cap IT space?
So I have a slightly different take. It's more of a conceptual in nature. Is that Mindtree has not scaled up its intelligence bank. They've not gone into AI, or they've not gone into the other high-end solutions. They're a Me Too company, and they need to differentiate significantly before they can make it big. So my stance on the stock is neutral.
Okay, well, they said that they want to go big on digital. I think that was what they said in the last analyst comment. Do you think that they will? Is it a good space to get into, and will they be able to get their act right, at least on this digital front?
Yeah, I believe that they will get their act right, but in a scenario where margins are collapsing and margins are under pressure, I think they do not have a very different value proposition to offer. And they have only one client, which is 50 million plus. The rest are all small accounts. So they really haven't been able to get a good client which can support their growth.
Avinash, you want to answer that, because these are valid concerns, because they don't have any larger clients, they haven't been able to get their act right together.
I think
are these valid concerns?
I think these are valid concerns, but I think the fact remains is the management has now made a renewed focus to get on the digitization space, and I think you need to give at least a couple of quarters before you could see some deal wins. I think clearly, if you look at the management team and the risk management kind of approach for Mindtree, I think this has definitely been quite good, and I would believe that clearly, if one were to look at a slightly longer term horizon of say 12-18 months, I think clearly it's not that there's a complete kind of rundown of the business. So probably you have to give some time. I mean, it may happen that you buy today, it may not move up significantly, but yes, within the IT basket, I think this is a more stable player. I would not be surprised that if margins are protected also at these levels, the markets would obviously be pleasantly be surprised.
Okay, Vivek does not track Mindtree, so I will not go to him for his view. But overall, Avinash is rather bullish on Mindtree. Vineet is neutral on Mindtree because he believes of certain concerns. Let's talk about the next stock, and that is Zee Entertainment. The stock is down almost 10% in the recent past. They've spoken a lot about growing as far as the OTT investments are concerned, what kind of money will come in. It's no doubt the largest media house in the country. What's the view ahead for Zee Entertainment? I'll start with you, Vivek. Any view on Zee? Do you like the counter?
Oh yeah, of course. I like it. I'm long-term bullish on it, and it's a long-term portfolio stock which you don't need to monitor frequently. It will compound your wealth over a period of time, over the next 2, 3, 5 or 10 years. The growth headroom opportunity in Zee is very substantial, both on the advertising as well as subscription revenue. We are not even factoring in new avenues of monetization, which is online and digital and so on and so forth. We are still not even talking about it. It's probably just scratching the surface. But in the traditional revenue streams of advertising and subscription itself, there's tremendous headroom to grow. Very few companies over a 10-15 year period deliver 25-30% EBITDA margins and return on capital of upwards of 25%. I mean, I think 10-year average return on capital and return on equity is closer to about 24-25%. Very few companies can match that kind of track record, and there's nothing to believe that over the next 5 years or so, those things will not continue. So the growth, return on capital, return on equity, cash flows, all of that will continue. Valuation wise, one may argue that it's rich, but well, it's still relatively cheaper than another comparable of Sun TV. If one were to look only at broadcasting businesses, or a TV Today, or Network 18 or TV 18. I mean, both of them are much smaller than Zee. I mean, if you were to compare from the size point of view. So valuations at maybe 30 times 1 year forward earnings, and I would say is still reasonable when I compare to other consumer oriented companies. Last 2 quarters, that is first quarter, June end, July, August also, thanks to GST, their advertising had slowed down, but for very strong reasons to believe that September onwards, there's been a bounce back in terms of ad spends as well. So my sense is the short-term disappointments are behind it, and now it's a good opportunity to buy on declines.
Okay, that's the view that's on Zee. We'll take a short detour because we have a management with us. Tata Sponge came out with its numbers over the market hours yesterday. Very strong set of numbers. If you're looking at the numbers, revenues grew 9%. EBITDA was up 100%. So EBITDA again above the 20% level. So it's the second quarter of a 20% plus EBITDA margin for the company. Profit up 72% at 28 crores. So we are joined by the managing director at the company, Sanjay Patna. He's on the line from Orissa. Good morning, good afternoon, sir. Thanks for speaking to BloombergQuint. My first question is the fact that the numbers so far have been rather good, but if I see on a quarter-on-quarter basis, margins have actually come off slightly. Any reason for that?
Is that Mr. Mehta?
Yeah, this is Darshan here, Darshan Mehta.
Yeah, Darshan, good afternoon to you and happy Diwali to you.
Same to you, sir.
Yes, I would say the H1 has been great, quite significant for us. And in terms of production, this is the best ever H1, and we have produced 2,02,000 tons. And going forward, also we expect that Q3, Q4 would be good. We will be producing more than what we have produced in H1, and we will meet our target. In terms of EBITDA margin, Q1 and Q2 of FY18 has remained around 21-22%. And going forward, I also expect around 20% EBITDA margin for Q3 and Q4. In terms of the question that you asked, in terms of Q2 being slightly, I think the performance has been little low than Q1. Just wanted to clarify that many of our maintenance activities we had planned, the yearly maintenance activities we have planned in Q2, and that is behind us. So Q3, Q4 hopefully should be good production, and with the numbers holding as far as the realization is concerned, I think it should be a good year.
So what about, can you give us more details on the current sponge iron prices and how do you see them for the balance of the year?
The present sponge iron prices is hovering around 16,000, 16,500 per ton, the realization, the net realization. And I would expect that it would be in the same region for Q3 and Q4. But let me also add that the volatility in the sponge market has been quite high. In fact, if I may say that in the last 15 days, there has been a drop of 1,500 rupees a ton.
Okay. My final question, sir, what's the cash on the books and what is your utilization plan?
We have, presently the cash is about 600 crores, and we have plans, but we are also expecting the refund from the government. That's the money that has been held back in the coal block, which was deallocated by the Honorable Supreme Court's order. So there were about 200 crores we are expecting from there. It's a legitimate claim, and we would be getting it as soon as our coal block is put up for auction. As far as what was your other question?
How are you planning to utilize this cash?
We have a growth plan which we have presented to our board, and we will be going in for a steel project. And the board has given us in principle clearance for going ahead and applying for the environment clearance because that's the longest, the most time-consuming activity. And in the meantime, we would be also finalizing the fine prints in terms of the asset configuration, in terms of the process route, and hopefully by the end of the year we should have a firm plan in place for our next phase of growth.
Thank you, sir, so much for speaking to BloombergQuint. Happy Diwali and all the best for the quarters going ahead, sir.
Son, and happy Diwali to you and your friends and your family members. Thank you.
Thank you, sir. Thank you, sir. Let's get back to Z Entertainment. Vineet, valuation-wise, does it look reasonable to you? Or do you have a positive or a negative view on Z?
So I agree with him
Yes.
on the fact that it's a good mover, but I think they need to do a lot more in the OTT business for any kind of further up move to happen. Otherwise, a 13 times multiple and ad spend revenue is expected to grow in mid-teens over the next 4 years. It's a very decent kind of business to be in. It will be a steady compounder. I don't see any concerns from the OTT business much because half of our generation will continue to watch the Idiot Box and the future millennials will continue to be migrating towards the OTT. So they will have to get their act together on the OTT business. And that is a key.
There was this note that Bank of America Merrill Lynch came out and they're saying that market is underplaying the investments that Z will have to do in the OTT business. They say that the market believes this will be very less, but actually it will be very more. Anything that you would want to say on this?
So as I said, that we have to watch that space, how Z performs with newer entrants. You have Netflix, you have Amazon, you have Balaji also coming in. So we need to see how they tackle this space because it's a very different animal from your conventional medium.
Okay, Avinash, your view? It's a 2 thumbs up for Z, but
I think I would also like to second the view here because obviously the OTP business is something which will require huge investment. But if you look at the business profile of Z Entertainment, I think it's got a very rich content pipeline in the existing business, a very strong cash-rich balance sheet. Return ratios are good. So I think over the next say 3-4 years, hopefully the OTP business also should be decent. And clearly this is going to be a segment which is going to see strong double-digit growth. So obviously once the demonetization and the GST impact gets neutralized, you're going to see growth coming back to normal. So I would definitely be a buyer. In fact, the price is correcting for whatever reason. The point is, if you look at FY19, FY20, I think at least 20 to 25% kind of compounded growth in earnings is possible. So I would be a buyer on decline, Darshan.
Okay, so it's a triple thumbs up for Z Entertainment. Let's move on to the next stock, and that is JP Power. News reports coming out that there are 5 suitors to buy out 30% stake in the company. What should one do? It's trading flat. Yesterday was up to almost 10%. Vineet, are you bullish on JP Power?
Yeah, I think there's a lot of value unlocking happening here.
Okay.
See, if you see, they have a portfolio of about close to 4,000 megawatts and 7 crores per megawatt. If you say, it comes to around 28 to 29,000 megawatts. The sustainable debt is about 14,000 crores. So you're left with another 14,000 crores of space. Today the market cap is sub 5,000. So there's a lot of room for gains coming in. And as to my knowledge, I think there are a lot of PE funds also bidding who may have been shortlisted.
Okay.
And if that were to happen, then in a very short span of time, you could have a sizable kind of upside. So considering the fact that the market valuations are frothy and everyone is looking for
so you're basically playing for the company to
the
get sold.
value unlocking.
That's what you're playing on.
See, the banks have guided to the minimum reduce your holding by 30%. And I think there would be much more in the deal than what is known to the street. So having invested 30%, where these people are, the shortlisters are looking at 30%, I think there would be more to increase their stake also further.
Okay.
So I think it's a good stock to be in. Having said that, if the deal does not fall out, if there is a fallout, then there could be a surprise on the downside because their Nigri plant has a lot of issues.
What about you, Vivek? Do you like JP? Would you put your money in JP? In fact, JP Power, sorry.
Not at all, actually. And my view has got a context to it. Even if there's a great value unlocking turnaround story, I'm willing to let go of the opportunity, and I would advise the same on that. I mean, there are just too many uncertainties whether the deal will happen, what price the deal will happen. The banks and lenders have converted their debt to equity in February, March of this year at 10 rupees. Whether they would whether they would sell their stake at less than 10 or anything at a significant premium to the current price, to me doesn't justify that. That's number one. Why would somebody buy something like JP Power at 12 rupees a share and take management control and so on, unless banks are willing to make further concessions on their total liabilities. Total borrowings, if I remember correctly, is about 25,000 crores. And it's sort of in a debt trap. Companies which get into, or businesses which get into these kind of situations of being a debt trap, very few companies really come out with it strong turnaround and so I'm not really willing to bet
Avinash,
on that.
I'm sorry, we are running out of time. Avinash, who do you agree with, Vineet or Vivek here?
No, I think I would like to play safe. I think this group has never rewarded investors. In fact, when any deal happens, Darshan, it's going to help the lenders more. And I think, this has been a penny stock, and I think the deal happening is going to be very critical, because if you see the operational kind of performance of the business, it's been extremely bad. They are already making huge losses. So I would prefer to stay away. I think, the deal may happen, may not happen, but from an investor standpoint of view, wealth creation or any big upside, I would be a little skeptical on this.
Okay, we have time for the final stock for JP Power. Vineet is extremely bullish for the deal, but Vivek and Avinash are not. Let's move on to the next stock, and the final stock, that is the mammoth MRF. It's trading at almost 70,000, 63,000 rupees. What to do with a high value stock like MRF? We'll ask our guest. Vivek, I'll start with you very quickly. MRF, do you like it? What's your view?
Well, I like it. I like the sector also, so I'll give you both the perspectives quickly. MRF standalone is a long-term portfolio holding that, again, you don't monitor frequently at a short notices. It will probably compound wealth at about 15%. At this point of time, growth versus value, JK Tyres offers better value, but I can't, we need to give credit to MRF, fantastic business, fantastic management in terms of long-term growth, return on capital, return on equity upwards of 20% in a sector which for 20 years it was very difficult for most companies to even generate 15% return on capital or return on equity, very low leverage and a consistent performer. So it can be a good long-term story, but at this point of time, JK Tyres will give you better upside simply from a valuation versus growth point of view.
Avinash, your view, MRF?
I think, MRF has been a great value creator in the last 5-10 years, but if you see the incremental upsides, I think, it operates in a commodity sector. So I would prefer that, if somebody were to put the same money in, say, Eicher Motors, that would be a better play, because, several growth levers are yet to play out. You have a branded business on the two-wheeler Royal Enfield business. You have the commercial vehicle business, which is now turning around. So I would believe that here, clearly from a balance sheet perspective, which is also very strong, they are debt-free, return ratios are impressive. So Eicher Motors could possibly be a better switch over the next 3 years. We could even expect a price of 45,000-50,000 a year. So incremental upside vis-a-vis MRF, Eicher Motors stands a better chance.
MRF, very quickly, we are running out of time.
So it's a portfolio stock, a good brand, so it will sustain. Vehicular growth expected to be from all segments at least 8 to 10%. A good story. The play out here is rubber.
Okay, so that's the view that's coming out on MRF. All our three guests are bullish on MRF as a portfolio stock. Vivek says which JK Tyre offers a better view. Avinash believes Eicher is a better choice if you want to switch money. And Vineet is also bullish on MRF as a portfolio pick. Before we wrap on the show, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, before we end, since it's Diwali, we'll ask our guest their top Diwali pick very quickly. Top Diwali pick, Vivek?
I'll go with JK Tyres.
That's his top Diwali pick is JK Tyre. Vineet, any top Diwali pick that you would recommend?
Yeah, Atul Auto.
Atul Auto. You already discussed that last time and why you're bullish on it. Avinash, your top Diwali pick?
I would prefer to play on Cochin Shipyard. It's a very strong defense play. So here one could possibly expect a good target price around 700 odd.
Okay, so that was the bonus that came in Hot Money today. Our guests have given their Diwali picks. JK Tyre is Vivek's pick. Atul Auto is the pick that Vineet has selected. And Cochin Shipyard is something that Avinash is extremely bullish on. one. Vivek, Vineet, Avinash, thank you so much for joining us on the special Diwali edition of Hot Money. Happy Diwali to all of you and all our viewers. With that, it's a wrap on today's Hot Money. Thanks for watching BloombergQuint.